Welcome to the AUSTRAC Reporting Entity Forum. My name's Steph, and I'm a specialist in the Industry Education and Outreach team here at AUSTRAC. Joining me today, I have Asim, also from the Industry Education and Outreach team, Montreal, Manager of the Mutual and Microbanks Regulatory Operations team, Bryony, Director of the Domestic Banks Regulatory Operations team, and Josh, Manager in our Enforcement team. And then we also have Emma, Manager of the Industry Education and Outreach team, who'll be moderating today's session and helping with that Q&A at the end. So I'd like to begin today by acknowledging the traditional custodians of country throughout Australia and the continuing connection to land, sea and community. I pay my respects to elders past and present, and of course extend that respect to all Aboriginal and Torres Strait Islander peoples joining us today. Thank you all for taking the time to join us. Now, the purpose of today's forum is to help you improve your AML-CTF compliance by providing sector-specific insights, addressing common challenges, and offering practical guidance. But selfishly, today is also a valuable opportunity for us to hear from you. So your questions and feedback help us understand the issues that matter most to your sector and influence how we can support you going forward. Before we dive in, we do have a few housekeeping items to address. So while this webinar is designed to highlight some key regulatory insights that may be relevant to your business, it does not constitute legal advice. And should you need to do so, we encourage you to obtain your own independent professional advice specific to your business and your individual needs. This webinar should not replace or form part of your AML-CTF staff risk awareness training program. As mentioned, we will have an opportunity for Q&A at the end of this session. And we ask that you please submit any questions you have relating to today's content using the Q&A chat function. And you can submit these at any stage throughout the webinar, and we'll do our best to answer as many of those as possible during the Q&A session. And finally, while we will be providing a brief update on the upcoming reforms, please just keep in mind that this is not the focus of today's webinar, and we may not be able to answer detailed questions on the topic. So AML-CTF rules and associated guidance are still in development, and AUSTRAC will provide education on these as details become available. Now, in today's session, we'll explore several topics, including a brief update on the upcoming reforms, AUSTRAC's regulatory priorities, insights from the regulatory supervision team, an update from our enforcement team, insight into how your transaction reports can contribute to our intelligence findings, a look at the 2024 compliance report data, and then finally we'll finish with that Q&A. Now, before I hand over to Asim, I'd like to ask you to take a moment to think about why you're here today and what you would like to take away from this session. So I encourage you, when you're listening to each speaker, to think about whether your business is meeting AUSTRAC's expectations in these areas. If yes, are there still areas you can improve? And if your business isn't meeting AUSTRAC's expectations, what are you going to do when you leave today to improve your AML-CTF processes? With all that being said, to kick off today's session, we'll start with that brief update on the AML-CTF reforms, what it means for you, and what's coming next. So to walk us through that, I'll hand over to Asim, who's also from the Industry Education and Outreach team.
Thank you, Steph, and good afternoon, everyone. As I'm sure you are all aware, Australia's anti-money laundering and counter-terrorism financing, otherwise known as the AML-CTF regime, is undergoing reforms. These reforms are indicative of the Australian government's commitment to protecting the integrity of the Australian financial system and improving our AML-CTF regime. To this end, the AML-CTF Amendment Bill was passed in November 2024, amending the AML-CTF Act and progressing the simplification and modernization of the AML-CTF Act regulations and rules. One key objective of the reforms is to expand regulation to tranche 2 entities. These include lawyers, accountants, and trust and company service providers, dealers in precious metals and stones, and real estate professionals. Services provided by these sectors are recognized globally as high risk for exploitation. but are not captured under the current AML/CTF regime. For existing reporting entities such as yourselves, the reforms also aim to increase flexibility, reduce regulatory burden, and improve clarity by making key terms, obligations, and terminology more consistent across AML/CTF Act and the rules. This simplified framework is designed to help you better understand your obligations and strengthen your ability to detect and prevent financial crime. The reforms also aim to modernize the regime so it remains fit for purpose in a rapidly changing financial environment. These reforms expand the risk-based approach, allowing flexibility as businesses continue to evolve. As part of this process, AML/CTF program requirements are set to change, moving away from ticker box compliance. The reforms will also better define the roles and responsibilities of a reporting entity's governing body and AML/CTF compliance officer, further supporting stronger oversight and suitability. The Financial Action Task Force, known as the FATF, is the global money laundering, terrorist, and proliferation financing watchdog. Influenced by the FATF, global AML/CTF regulation is inherently risk-based. Their first recommendation is to identify, assess, and understand risk. Almost all AML/CTF obligations flow from this. As mentioned earlier, the updating requirements will place a much stronger emphasis on the need for meaningful risk-based controls. One of the key changes is the introduction of proliferation financing. Proliferation financing is when a person makes an asset available, provides a financial services, or conducts a financial transaction that is intended to facilitate the proliferation of weapons of mass destruction, regardless of whether the activity occurs or is attempted. While some of you may already been considering your proliferation financing risk, the reforms now expressly requires this. It will now also be expressly required that reporting entities assess their money laundering, terrorism financing, and proliferation financing risk as part of the AML/CTF program. While you may already be doing this in practice, this change formalizes that expectation and reinforces that your risk assessment must be the foundation of your AML/CTF compliance program. There are other structural changes to the AML/CTF program under the reforms, such as moving away from having a Part A and Part B program and a requirement for you to create and maintain appropriate AML/CTF policies to manage and mitigate the specific risks identified in your business. Beyond the content and structure of your AML/CTF program, the reforms also address practical elements such as strengthening governance frameworks. The reforms will require you to have a governing body, senior management, and AML/CTF compliance officer. And the legislation will clearly define these roles. The governing body and senior management will be required to provide ongoing effective oversight of the business's AML/CTF compliance and risk management activities. And while the obligation to have an AML/CTF compliance officer is not new, the reforms place a stronger emphasis on the suitability of the individuals in these roles. This will mean that the person appointed to this role must meet specific fit and proper requirements to ensure they have the necessary expertise, integrity, and seniority to fulfill their responsibilities effectively. More information on the AML/CTF compliance officer will be determined through ongoing consultation of the rules. You may have also seen in the amendment bill that independent reviews or evaluations will be required to be conducted at least every 3 years. This does not mean 3 years will be appropriate for all businesses. The frequency with which evaluations must be conducted must still be appropriate to the nature, size, and complexity of the business. The rules will also clarify the requirements around the conduct of independent reviews. Finally, a core objective of the reforms is ensuring obligations are clear and reflect contemporary business. This is particularly evident in a number of targeted changes covering obligations like customer due diligence, international value transfer service reports, value transfer chains, and tipping off. To summarize, you will have seen this clarity achieved in the reforms to the tipping off offense, which came into effect on 31st of March this year. The changes now focus on whether disclosing information would or could reasonably be expected to prejudice an investigation. This new harm prevention approach shifts the focus from compliance to risk and reduces unintended compliance challenges or regulatory burden. There will also be changes to customer due diligence requirements to ensure a more targeted and flexible approach, focusing on outcomes that help mitigate risks associated with higher risk customers and transactions. The reforms clarify and simplify customer due diligence obligations, reinforcing that customer due diligence is an ongoing process. These changes will also clarify the level of checks applied to each customer initially and an ongoing basis. They outline expectations around customer risk rating, initial customer due diligence, ongoing customer due diligence, and enhanced customer due diligence. International value transfer service reports will replace the current international funds transfer instruction reports, otherwise known as IFTIs. The reporting obligation will now lie with the reporting entity closest to the Australian customer, better reflecting how these businesses function in practice. These changes will come into effect 31st of March, 2026. That brings us to the end of the reform update. For now, I'll hand over to Steph, who will take us through AUSTRAC's current regulatory priorities and how these shape our engagement with the industry.
Thanks, Asim. So let's now turn our focus to those AUSTRAC current regulatory priorities. While the reforms provide insight into the future of the regime, our day-to-day work is guided by the risks and issues we're seeing across the reporting entity population now. These priorities shape how we engage with industry, where we focus our supervisory efforts, and how we support reporting entities to strengthen their compliance. In 2023, AUSTRAC published our regulatory priorities for the first time, outlining our focus areas for strengthening Australia's financial system's resilience to money laundering, terrorism financing, and other serious crime. These priorities are structured around 5 key themes. The first is our enduring priorities, which include core areas of compliance, such as AML-CTF programs, MLTF risk assessments, reporting obligations, and high-risk sectors. The second is increased regulatory focus on emerging and high-growth sectors. This currently applies to digital currency exchange or virtual assets, payment platforms, bullion, and non-bank lenders and financiers. The third priority is serious and systemic deficiencies. This theme relates to compliance failures in key areas, including board and executive accountability, transaction monitoring programs, and the outsourcing of AML-CTF functions. The fourth priority is continuous improvement, which will modernise and improve Australia's AML-CTF regime. The Australian government has reiterated this through the legislative reforms. And the final priority is partnerships, building and maturing strong relationships with a wide range of partners across industry, government, and law enforcement to support our regulatory objectives. These regulatory priorities aren't just high-level goals, and they directly influence the way AUSTRAC approaches supervision. They help us shape our engagement with industry, inform where we focus our attention, and guide how we assess and respond to compliance behaviours. Now, to provide more insight into how these priorities have been implemented, I'll hand over to Montreal, the manager of the regulatory operations team for mutual and micro banks, and he'll share some of his team's recent supervisory work, key observations, and areas of focus going forward.
Thanks, Steph, and good afternoon, everyone. As Steph mentioned, my name is Montreal. I'm from AUSTRAC's Domestic Banks Regulatory Supervision team. We have two teams responsible for supervising mutuals, credit unions, and micro ADIs, which for simplicity, I will refer to as the mutual bank sector. The second and mid-tier banks team is responsible for the larger mutuals, and the mutual and micro bank team supervises the smaller mutuals and micro banks. Before I begin, I'd like to share my personal analogy, which helps me understand the relationship between the different components of an AML-CTF framework. I liken it to a building. The governing board is the building owner. Your MLTF risk assessment is the concrete foundation. The AML-CTF program is the architectural framework, the pillars and the beams. The systems and processes that you have, the electricity and the plumbing. Your TMP is your windows. Your SOPs and staff procedures are your walls and internal furnishings. And the independent reviewer is the building certifier. Now, if your foundation and framing are not level, even if you spent a lot on high quality windows, they might be leaky, putting your building at risk of water damage and moisture issues. You can teach staff to mop up water leaks, use mold spray every month, lay towels around windows before every storm, but those will never fix the underlying problem. The foundation is important as it will impact on whether the framework built on top of it is fit for purpose, resilient, and stable enough to bear the weight of additional levels. Conversely, if the foundation isn't strong, everything built upon it is more vulnerable. I know this analogy is not perfect because a building is static after being built, and renovations are uncommon. Your AML-CTF program, however, should be a living document, which is updated to remain fit for purpose. So I'm here today to provide you with an overview of the supervision activities that AUSTRAC has conducted within the mutual bank sector over the past year. I will also be sharing the common issues and main takeaways that we identified from these activities. And finally, I'll wrap up by going over some key areas my team will be focusing on over the next 12 months. To summarize, our key regulatory activities within this sector over the past year included 2 supervisory campaigns involving 22 entities from the mutual bank sector. These campaigns provided AUSTRAC with a deeper understanding of the sector's AML-CTF capabilities, challenges, and ability to meet obligations. And as a result, we shared our observations and recommendations with the sector via feedback. That was tailored feedback to the entities we directly engaged and thematic feedback to all reporting entities in the sector. The feedback called out enhancements and good practices implemented by entities, and also areas where we identified weaknesses or areas for improvement. Some entities which received tailored feedback were requested to share their uplift plans. There have been examples of great initiatives and improved attention to their AML-CTF framework. Our thematic feedback requested entities to undertake a gap analysis to identify which aspects of the feedback are applicable to them and encourage entities to take action to address any gaps and be in a position to explain their enhancements to us if requested in the future. During this session, I will share with you a few of those areas for improvement that my team has identified. I also want to draw your attention to AUSTRAC's media release on the 15th of May regarding AUSTRAC's work in the non-bank lending space, where some similar deficiencies have emerged, which have resulted in AUSTRAC appointing an external auditor for the lender. As I share this information with you, I encourage you to consider the systems and controls you have in place and the actions you can take to ensure you are meeting your AML-CTF obligations. Now, the first area for improvement relates to MLTF risk assessments. MLTF risk assessments are a fundamental aspect of an AML-CTF framework, the foundation in my building analogy. Risk assessments should be undertaken regularly and also when certain triggers are met to assess changes in how you do business, changes to your business's MLTF risks, which includes the level of exposure to existing and emerging risks, the effectiveness of your controls, and the residual risk levels. If your risk assessment is not comprehensive and specific to MLTF, there can be flow-on vulnerabilities to many aspects of your AML-CTF framework. AUSTRAC has published risk assessments for the mutual banking sector. In 2019, the mutual banking risk assessment outlined our assessment of the criminal threat environment, the vulnerabilities present, and the associated consequences specifically for this sector. In 2024, AUSTRAC moved away from sector-based risk assessments to a national risk assessment for MLTF. The overall risk rating for this sector has remained stable over the years, with a medium bordering on high risk for money laundering and a high risk for terrorism financing for the general banking industry. Unfortunately, many entities in this sector have self-assessed they have a low inherent exposure to MLTF risks. And this discrepancy with AUSTRAC's view for the sector is concerning. 70% of the entities we recently engaged with reported that they had not reviewed our 2019 mutual banking risk assessment. We suspect this is not merely a coincidental correlation, and that entities not reviewing AUSTRAC's publications and guidance for MLTF risks is a contributing factor to this misalignment. Now, through our regulatory activities, the key issues we identified were that entities had unrealistic views of inherent MLTF risk exposure. Whilst entities may differ in their views with us, their rationale has not been clearly evidenced. Some of the rationale has even been directly contradictory to the information in AUSTRAC's guidance. For example, entities reported that their simple and non-complex banking products are low risk. In fact, simple products like transaction accounts have been assessed as having a very high risk for MLTF. Now, the process and outputs of MLTF risk assessments have been poorly articulated. For example, we've seen poorly described systems and controls to manage and mitigate each risk, along with a lack of assessment of the effectiveness of those systems and controls. We've also seen lack of clarity of how the residual level for each risk was determined and how assumptions were validated before being used in the risk assessment. We observed that a significant portion of this sector have reported that they do not have any high-risk customers and also very few medium-risk customers. Now, during our last campaign, we also noticed a reluctance by some entities to label particular customers as high risk. Having high-risk customers on your books is not in and of itself a concern to AUSTRAC. Rather, in many cases, the identification of high-risk customers and the submission of quality SMRs is indicative of a well-functioning and effective AML-CTF framework. Conversely, a clear red flag to AUSTRAC is if you don't have any high-risk customers at all. I share this with you to dispel any potential misconceptions and invite you all to reconsider your customer risk ratings. If you have not reviewed both the 2019 and 2024 risk assessments, we highly recommend that you do so, as it is AUSTRAC's expectation that a prompt review is undertaken to determine whether the information from this should be incorporated into your AML-CTF program. So another key area for improvement relates to AML-CTF program vulnerabilities. As a reporting entity, you must have an AML-CTF program that details the processes and procedures you will use to meet your obligations. We have observed two common problems with the designer programs in this sector. Many entities are using third-party designed template programs. Again, using a template to design your program isn't in and of itself a problem. The problem is if you don't sufficiently tailor those templates to your business. There is no one-size-fits-all AML-CTF program. It must be risk-based and correspond to your business. A template program which is insufficiently tailored will not be fit for purpose in helping you manage your specific MLTF risks. Secondly, there are programs where a majority of the content states what the business must do, merely replicating or mimicking the requirements of the legislation. Instead, your program should focus on explaining what you do or will do to identify, manage, and mitigate the risk of your business being exploited for money laundering or terrorism financing. Your program must incorporate elements of your MLTF risk assessment. That is, the likely level of risk of your business being exploited based on its size, nature, and complexity. Specifically, it needs to take into account who your customers are, the designated services you provide, how you deliver those services, and the foreign jurisdictions which you deal with. Using a risk-based approach also gives you the flexibility to decide how to meet your obligations and the areas you need to reinforce through additional controls. Referring back to my analogy, if your building is next to a busy road, you might choose to install double-glazed windows to reduce road noise. Whereas another building next to the coast may opt for special paint which can withstand corrosion from salty sea spray. AML-CTF programs are vital to protect your business, your communities, and Australia from criminal activity. The absence of a purpose-built AML-CTF program is not only a breach of your obligations, it also creates significant operational and reputational risks. We recommend that you review the AML-CTF program guidance on our website and ensure that your AML-CTF program is appropriately tailored to your business model. Excuse me there. So next, I'd like to highlight independent reviews and some of the deficiencies with these reviews that we have observed. In my analogy, the independent reviewer is the building certification, an extremely important process. Its purpose is to test whether the building is fit for purpose, meets specifications, and is safe. As you all know, an independent review is a critical evaluation of the effectiveness of your business's AML-CTF framework. It is designed to assess the effectiveness of your program's design and whether it is operating as intended. It can provide crucial insights to help your business and its governing board and assist the board and senior management in making important decisions about your AML-CTF function. It's ultimately your responsibility to select your independent reviewer and to ensure their review meets the requirements of the legislation. Now, our first concern relates to the selection of the person conducting the independent review. We have identified instances where the independence of the reviewer may not meet AUSTRAC's expectations of independent due to their involvement in developing the program, including the MLTF risk assessment, developing controls, or implementing or maintaining the program. If you have engaged the same reviewer for an extended period of time, that ongoing business relationship can potentially impact their independence. So we encourage you to consider obtaining a fresh perspective from another provider. Our second concern relates to the scope and quality of the review. We have observed that some smaller entities are engaging reviewers who might lack the necessary AML-CTF expertise to conduct their independent reviews. This equally applies to internal or third-party providers. Some reviews have a limited scope and lack of appropriate assurance testing to assess operational effectiveness. That is, whether a program is working as intended. A lack of appropriate assurance testing may result in reviews failing to identify material deficiencies and areas for improvement in your businesses. And also the scenario where the views and assumptions of senior management are not appropriately challenged. To gain meaningful insights from your independent review, you must ensure that the review's scope is comprehensive and includes thorough testing. When AUSTRAC supervision teams conduct compliance assessments or other regulatory engagements, we will typically request the most recent independent review report. When we see reports which do not identify areas for improvement, our team will look further into the independent reviewer's methodology and testing. We have definitely seen examples where independent reviews have not identified deficiencies that have subsequently been identified by AUSTRAC. And on the flip side, we have had instances where deficiencies identified by AUSTRAC have already been called out by the independent reviewer. In some cases, these entities have commenced remediation and uplift activities, and in some cases, remediation has only commenced following an assessment report from AUSTRAC. We look at these examples as demonstrations of the compliance culture and the importance placed on AML-CTF by these entities. In order to meet AUSTRAC's expectations, you must ensure your independent reviewer possesses the required expertise and also maintains true independence. This ensures that they can provide an objective and critical assessment. So when selecting an independent reviewer, ask yourself, are they someone who has appropriate knowledge and experience with AML-CTF? Do they understand your business or organization? Do they understand your MLTF risks? And have they been involved in any part of developing the program, including assessing your MLTF risk, developing controls, or implementing or maintaining the program? The reviewer can be someone within your organization or an external entity. An internal reviewer might be an auditor in your business who doesn't have a compliance role. The key is their independence from the program's development and maintenance. Finally, remember the importance of documentation. You must have a documented report of the review that includes the reviewer's findings and recommendations. The report must be provided to senior management and if applicable, the governing board. It is recommended that you also document your planned actions to address the reviewer's findings and recommendations to showcase your responsiveness to identified deficiencies. The board of directors within your organization play a key role in your AML-CTF compliance. Robust independent reviews and clearly articulated reports enable boards to understand the deficiencies within the organization. Where independent reviews may not be robust or have clear reports, boards may be unaware of deficiencies and unaware that their independent review process may not be sufficiently robust. We've all heard stories in the media about serious defects with apartments. Issues should be detected by the building certifier if they are experienced and thorough, and the same goes for your independent review. Who you select to conduct your independent reviews is ultimately up to you. All I know is that if I had a building, I'd want to make sure my reviewer was an expert and did the job comprehensively, so that I know the true condition and was aware of issues and the degree of seriousness. At the end of the day, I just want peace of mind that I'm safe. The transaction monitoring is our next key area for improvement, and this happens to also be one of our regulatory priorities. TMP is a crucial component of your AML-CTF framework. Without having an effective TMP, you are trying to pick needles from a haystack. It's a fruitless exercise and a big drain on your resources. A TMP which is tailored to detect risks specific to your business enables the rest of your AML-CTF function to work. It helps your employees identify potentially suspicious behaviors and transactions and to take steps to protect your business and customers, as well as meet your obligations. In this sector, we have identified that TMPs are often immature and not designed to detect all of the relevant risks, and that assurance and governance processes are lacking, leading to your TMP not working as intended. We've seen examples of detection rules solely focusing on fraud and volume or velocity of transactions. This potentially overlooks more sophisticated MLTF activities and typologies. We've also seen TM rules not being regularly reviewed, limiting your adaptation to emerging risks. Where there's ineffective calibration of TM alerts, transaction monitoring alerts, overwhelming numbers of alerts may waste your resources or cause you to miss genuine risks. Where there's insufficient assurance and documentation over TMP investigations and decisions whether to report transactions to AUSTRAC, this may result in staff missing critical steps or missing reporting deadlines. I will now hand you over to Bryony, who is the director of our domestic bank supervision team, who will share our observations about governance and our future focus.
Thank you, Montreal. So the last key area for improvement we'd like to share with you today relates to governance, particularly board engagement and oversight. So in Montreal's analogy, the governing board is the building owner. The more diligent and better informed they are, the better decisions they can make about the state and condition of the building, preserving and even improving its value. In the course of our regulatory activities, AUSTRAC has certainly seen examples of owners not maintaining their own buildings. In this sector, it appears some smaller entities may place a lower priority on AML-CTF. We have noticed that some entities have not clearly defined their appetite for MLTF in their risk appetite statement, and some also treat MLTF solely as a compliance risk and don't acknowledge it as an operational risk. Governance and oversight of AML-CTF is important because criminals will find a way to financially exploit your business. The degree of board engagement on AML-CTF impacts the effectiveness of all the key AML-CTF functions. The level of oversight signifies what is important to the business and influences how much attention and what resources are devoted to each facet. The issues mentioned earlier all have some relationship to the AML-CTF culture, which the board should be setting. Without receiving quality and regular reporting on AML-CTF matters, boards may not be receiving the necessary information to be aware of potential issues with AML-CTF compliance and be able to check and challenge assumptions about the effectiveness of the AML-CTF function. Boards rely on management to provide this reporting and also on experts to provide an expert opinion independent of management. So what does good governance look like? Through effective oversight of AML-CTF compliance, boards and senior management can lead an organisation-wide positive AML-CTF culture. This includes the board and senior management engaging, questioning, challenging, taking ownership and ensuring adequate resources are allocated to address any MLTF risks that the business face. Overall, we encourage entities to take an outcomes-focused approach to AML-CTF by understanding and responding to the risk of harm from MLTF, not just the risk of an AUSTRAC fine. To achieve this, we would like to share some key points that lead to good governance. So, boards and senior management oversight. When boards have clearly defined their risk appetite for MLTF, this should contribute to a flow-on effect where leadership ensures that components of your AML-CTF function are adequately resourced and appropriately governed. Senior management has clear accountabilities and prioritise risk management. This ensures that specific responsibilities are assigned and that new and emerging MLTF risks are identified, monitored and addressed. Boards and senior management support timely issue resolution and have a compliance focus. So where you do identify compliance and system issues, these need to be documented, escalated and fixed promptly with a focus on preventing systemic non-compliance. Boards and senior management should consider change management and issue identification. So having assurance processes in place to manage changes without disrupting compliance and have mechanisms in place to quickly identify and resolve instances of non-compliance as a result of change management. And ongoing oversight and third-party management. Oversight is an ongoing responsibility and is extended to outsourced functions. I'm sure you're all aware that your business can outsource the function, but you can't outsource the obligation. So for example, if you outsource your ACIP, Applicable Customer Identification Procedure, or your transaction monitoring system, you retain the responsibility to ensure that the provider is acting in accordance with your AML-CTF program and that the quality of the activity is to the requisite standard and that you have controls in place to confirm that this is being met. So moving on to our future focus. Looking ahead, we will be contacting most of the entities in the mutual banking sector very soon to follow up on whether you have considered the thematic feedback that was provided at the end of last year and what steps, if any, you've taken in response to this. We will be reaching out with a questionnaire and the responses that you provide us will help us to determine where we might focus our regulatory efforts for this sector going forward. But more generally, AUSTRAC will continue to focus on ensuring that reporting entities maintain risk-based and fit-for-purpose AML-CTF programs. We'll be monitoring how businesses are adapting their programs to respond to changes in their products, services, customer base or risk environment. We'll be supporting improvements in the quality and relevance of MLTF risk assessments, assessing the effectiveness of transaction monitoring programs and the ability of entities to detect and respond to unusual or suspicious activity, and reviewing how entities apply their enhanced customer due diligence measures and manage higher risk relationships and transactions. We will also maintain a strong focus on entities' governance and oversight arrangements, particularly the role of boards, senior management and AML-CTF compliance officers in ensuring programs are properly maintained and adapted to emerging risks. AUSTRAC's approach remains risk-based, intelligence-led and outcomes-focused. We encourage all reporting entities to take a proactive approach to compliance. Review your systems and controls regularly and ensure they're fit for purpose in a rapidly evolving risk environment. By maintaining strong AML-CTF programs and engaging openly with AUSTRAC, you contribute directly to safeguarding Australia's financial system and protecting the broader community. I hope that this has given you a clear sense of the key themes we're seeing across the mutual and wider reporting entity population and how AUSTRAC is working with industry to strengthen compliance outcomes. Thank you for listening to Montreal and I today. I'll now hand back over to Steph.
Thanks, Bryony, and thanks, Montreal, for that great overview of AUSTRAC's recent supervisory work, and as well as the practical insights that you shared with us today. So just a reminder to our audience, if you do have any questions for the regulatory team, to please chuck them into the Q&A, and we can try and get to those at the end of the session. Now, while supervision plays a key role in helping reporting entities strengthen their compliance, there are times where more serious or systemic issues require a stronger response. With that in mind, I'll hand over to Josh, Manager in Enforcement, who will provide an update on AUSTRAC's enforcement activity, key themes we're seeing in non-compliance matters, and what to expect going forward.
Thanks, Steph. Good afternoon, everyone. My name is Josh Barr, and I'm a manager in AUSTRAC's enforcement capability. If reporting entities do not meet their obligations under AML/CTF law, AUSTRAC can take steps to compel their compliance and/or seek a penalty. Enforcement actions are specific legal actions we can take to make sure reporting entities comply with the law. Enforcement actions available to AUSTRAC are civil penalty orders, enforceable undertakings, infringement notices, remedial directions. Another type of action AUSTRAC can take is to issue a written notice requiring a reporting entity to appoint an external auditor to review your MLTF risk management or AML/CTF compliance, or undertake an MLTF risk assessment. We can also refuse, cancel or suspend the registration of remittance service providers and digital currency exchange providers if they pose an unacceptable risk of money laundering, terrorism financing, and/or other serious crime. AUSTRAC very recently refused to renew a crypto ATM operator's registration and placed operating conditions, including transaction limits, on other Australian crypto ATM providers. Over the past year, AUSTRAC has continued to use its full range of regulatory tools, including enforcement powers, where necessary, to respond to non-compliance and uphold public confidence in Australia's financial system. While we like to be transparent about our enforcement outcomes, it's important to note that not all investigations have progressed to the point of public outcome. So today, I will only speak to matters that are already in the public domain. We recognise that threats are evolving and controls won't always catch everything. But compliance failures in the AML/CTF regime can contribute to significant real-world harm. And where harm has occurred, or where the risk of harm has been materially increased by those failures, reporting entities should expect AUSTRAC to act accordingly. Recently, AUSTRAC undertook significant enforcement action against several entities for failing to comply with their obligations under the AML/CTF Act. One of the more prominent matters involved a casino operator, where enforcement action led to a substantial civil penalty. The casino operator was found to have failed to meet customer due diligence requirements and had systemic weaknesses in its risk management and controls. As a result, the federal court ordered the casino operator to pay a substantial penalty. The decision was based on findings of serious breaches of the AML/CTF Act, particularly around ongoing customer due diligence and systemic control failures. These weaknesses allowed high-risk customers to move large sums of money through the casino's operations over several years, obscuring the origin and ownership of those funds. The casino operator also provided services through high-risk channels and to high-risk customers without implementing necessary risk-based controls. As a result, they failed to conduct required checks on a significant number of customers, including individuals known to law enforcement or presenting indicators of potential money laundering risk. This outcome highlights the importance of establishing and maintaining a robust risk-based AML/CTF program, not just to avoid substantial penalties, but to protect the integrity of your operations and reputation over the long term. Looking ahead, serious and systemic non-compliance, particularly regarding foundational obligations, such as risk-based customer due diligence, will remain a focus of AUSTRAC's enforcement work. In an environment of evolving threats, we recognise that some degree of failure is inevitable. Controls won't always hold up. We accept that. But we're still seeing, in too many cases, basic obligations not being carried out effectively or at all, an unpersuasive proof that the business is taking reasonable steps to reach compliance. It's important to remember, AML-CTF is not a set and forget regime. You need to ask, how does MLTF risk actually play out in your business? Where are the real vulnerabilities? How are you monitoring whether your controls are working? And what happens when they're not? Again, the AML-CTF regime is not designed to eliminate all financial crime. It's about taking reasonable, evidence-based measures to identify, manage, and mitigate risk. That means you need to explore a tailored and proactive approach. There is no one-size-fits-all solution. While we recognise that occasional failures may occur, it is critical that when these issues are identified, they are addressed promptly. Open, proactive communication with AUSTRAC, particularly where significant compliance concerns arise, is the most effective way to mitigate broader consequences. We saw this approach in practice recently when AUSTRAC accepted an enforceable undertaking from a corporate bookmaker following an extensive supervisory assessment. The corporate bookmaker demonstrated its willingness to cooperate and proactively address its obligations. AUSTRAC determined that accepting an unenforceable undertaking from the corporate bookmaker was the most appropriate regulatory response. This matter highlights the importance of collaboration, transparency, and early action in supporting compliance outcomes. In contrast, a culture which encourages avoidance or compliance window dressing will also be a focus of AUSTRAC's enforcement work. By proactively engaging with AUSTRAC and strengthening your compliance frameworks, you directly contribute to safeguarding Australia's financial environment. That brings us to the end of the enforcement update. While the nature of my day-to-day work means that some things do not end up in the broader public forum, I hope this has provided some useful insights into our enforcement focus and the importance of maintaining risk-based controls. Thank you for your time. It has been a privilege to be able to engage with you. That said, and I mean this in the nicest possible way, I hope you don't encounter me or my enforcement colleagues in future in the context of our day jobs of conducting enforcement investigations and enforcement action. With that, I'll hand back to Asim to continue with today's session.
Thanks, Josh, for that update. It's a strong reminder that while AUSTRAC understand the challenges of managing financial crime risk, there's a clear expectation that reporting entities are actively identifying, addressing, and learning from gaps in their programs. A reminder here that if you have any questions for Josh, please enter this into the Q&A. We're now going to shift our focus from taking a step back and looking at the bigger picture through the lens of AUSTRAC intelligence insights. This is where we start to see the why behind the AML-CTF regime, how criminal threats are emerging and evolving, the sectors being targets, and the behaviors that create vulnerabilities. Today, you have heard about your AML-CTF obligations and the weaknesses observed by our supervision and enforcement teams. You have also heard about AUSTRAC's expectations. Why does this all matter? As a reporting entity, you are at the front line in combating financial crime, and you know your customers best. So you are best placed to recognize potentially suspicious behavior or activity and report it to us. Each year, billions of dollars in illicit funds are generated from illegal activities such as drug trafficking, tax evasion, cybercrime, and other illegal and corrupt practices. As criminals seek to exploit vulnerabilities within the financial system to disguise illicit funds and enable serious criminal activity, AUSTRAC's dual role as AML-CTF regulator and financial intelligence unit helps to build resilience in the financial system and allows us to use financial intelligence and regulation to disrupt these activities. The report that you submit makes a real difference in detecting, deterring, and disrupting criminal and terrorist activities. We analyze the reports you submit using sophisticated modeling and predictive analytical tools, cross-referencing them with reports other entities submit, as well as our own intelligence holdings to find patterns of criminal activity, including money laundering and terrorism financing. We share this information to help our partners in Australia and overseas to investigate and fight crime. It's your information that can help launch an investigation, solve a crime, or link criminals that are not previously known, helping to protect the wider community. Advancements in technology allow people to do business and move money around the world more quickly and easily, but it also creates opportunities for criminals who are constantly looking for ways to take advantage of the global financial system. Almost all serious crime types have a financial component. As such, financial transaction data analysis can assist in identifying relationships between individuals and networks, the movement of funds, and patterns of activity or behaviors. From our dual regulatory and financial intelligence perspectives, the work we do has a significant impact in disrupting serious and organized crime. In practice, there are a number of opportunities available for the utilization of AUSTRAC intelligence and for us to provide support. We produce intelligence products that are used to assist in law enforcement investigations by giving investigators new and potential lines of inquiries. In addition, the AML-CTF legislation allows for the collection of further information from reporting entities or related parties in response to the reporting they have provided to us. We have intelligence analysts based in key partner agency offices around Australia to support investigations, as well as liaison officers based overseas in key locations. We also collaborate with partner agencies by participating in various law enforcement task forces and operations, where financial intelligence can be effectively utilized to identify individuals or entities of interest that are under investigation. And finally, we provide support to our regional, international financial intelligence units and regulatory counterparts. This is to increase compliance with international standards, particularly through the development of stronger AML-CTF capabilities and overall intelligence expertise. I will now share a case study to help paint a clearer picture of how reports submitted by reporting entities like yourselves provided intelligence that directly aided a real criminal investigation. Our information was used by a law enforcement agency to investigate a multi-million-dollar identity theft and fraud syndicate that targeted superannuation accounts. Members of the syndicate stole checks, superannuation statements, and personal bank statements from the mailboxes of unsuspecting victims and used this information to produce high-quality counterfeit identity documents. These documents were then used to conduct fraud. Syndicate members also approached some victims directly, offering them early access to their superannuation funds and requesting details of their funds to facilitate access to their superannuation benefits. We received suspicious matter reports, or SMRs, from reporting entities, which provided information on the individuals suspected of perpetrating the fraud. Information in these reports combined with further analysis identified a large criminal syndicate that was receiving regular check deposits into newly opened accounts and paying an additional fee to ensure the checks cleared quickly. Once the checks were deposited, the funds were withdrawn from the accounts and made payable to the third parties. The syndicate was also submitting fraudulent applications to roll over funds from victims' superannuation account into those held by the syndicate members. One SMI in particular identified a syndicate member as the signatory of 2 business check accounts, which were newly opened in order to operate 2 self-managed super funds. Over a 3-month period, these accounts received more than 500,000 Australian dollars, which had been rolled over from several superannuation funds. Once the funds were deposited into the new check accounts, they were immediately withdrawn by the syndicate member. A total of 25 syndicate members were charged with more than 2,500 offences, which involved the laundering of over 8 million Australian dollars in fraudulently obtained funds. The head of the syndicate, who controlled 3 bank accounts that turned over 1.6 million Australian dollars, was found guilty of 57 counts of identity fraud and money laundering in relation to transactions valued at more than 550,000 Australian dollars. This case study highlights the crucial role that reporting entities such as you play in supporting intelligence, outcomes, and keeping our community safe from criminal abuse. This brings us to the close of the intelligence insights and how AUSTRAC use intelligence. As you can see, the power of data and intelligence is fundamental to how we identify emerging risk and proactively foster a stable and resilient financial sector, ensuring robust financial landscape for everyone. I will now hand over to Steph, who will take you through the rest of today's session.
Thanks so much, Asim. I'd now like to take the opportunity to give you a brief overview of our initial insights from the 2024 compliance report. As reporting entities, most of you are required to submit a compliance report to AUSTRAC each year, where you answer a few questions about how you have met your AML/CTF obligations. The information gathered from the compliance report provides key data for AUSTRAC risk modelling of reporting entities and sectors as a whole. It helps us understand how you're tracking with your obligations, where there are areas of strength, and where there may be some gaps that still remain. It also helps inform how we define our regulatory priorities and tailor our engagement and support going forward. As many of you will know, the reporting period for the 2024 compliance report only closed March 31, so we are still deep in our analysis. However, we have identified a few trends early on that have emerged, and they do align closely with the themes that we've touched on today. So to begin with, it's worth noting a positive outcome from the 2024 compliance report period, with 84% of all reporting entities who have that compliance report obligation having completed their report. That's up from 82% last year. It's encouraging to see an increase in engagement across the population. As mentioned, that data you provide gives us vital insights into how the regime is working, helps us shape guidance, identify gaps, and tailor support where it's most needed. Ultimately, the more complete and accurate data we receive, the better place we are to help you meet your obligations and protect your business from risk. Moving on to risk assessments, while it's also encouraging to see that 91% of reporting entities in the banking sector reviewed or updated their MLTF risk assessment in 2024, only 15% of those reporting entities indicated that they did so in response to AUSTRAC engagement, guidance, or feedback. While we acknowledge that not every AUSTRAC engagement will require a full reassessment of your risk profile, this number does suggest that many entities may be missing opportunities to adapt their programs in response to regulatory or environmental change. For example, as Montreal mentioned earlier, AUSTRAC published national risk assessments on money laundering and terrorism financing in the past year. These risk assessments should be used by entities to review and update their own risk assessments. AUSTRAC also presented sector-specific webinars to communicate the findings of these assessments at the time, and you can find recordings of these sessions on our AUSTRAC YouTube channel. We also provided thematic feedback specific to all entities in the sector, encouraging you to review those resources and then review your MLTF risk assessment. But now, when it comes to reporting obligations, we know that timely, accurate reports are one of the most valuable contributions entities can make to the broader AML-CTF regime. However, compliance report responses continue to show variability in how these obligations are being met, particularly around the systems and controls that support detection and escalation. This has a flow-on effect to the governance and oversight of your frameworks. So, for example, only 30% of reporting entities in the banking sector who confirmed that they outsource one or more of their AML-CTF obligations said that they provide reporting to their board or senior management on the performance of those outsourced functions. Now, given that outsourcing is relatively common, with about 61% of all reporting entities stating that they outsource one or more of their compliance functions, this highlights the need for stronger governance around outsource arrangements to ensure that oversight and accountability remains in-house. Finally, let's talk about transaction monitoring. So the data currently shows that 50% of all reporting entities identified suspicious activity via staff, while 37% identified it through their transaction monitoring program. This alone tells us there's room for improvement in transaction monitoring program effectiveness. But what's particularly important to highlight is that of all reporting entities, those who did review their transaction monitoring program in the past year were more than twice as likely to detect suspicious activity, with 48% of those who reviewed their TMP making a detection, compared to just 22% of those who had not. This reinforces a critical point. Much like your AML-CTF program as a whole, your transaction monitoring program is not set and forget. Ongoing tuning, testing, and adaptation are essential to ensuring that TMPs remain aligned with your risk profile and capable of detecting suspicious activity in real time. Now, altogether, these insights help us see where improvement is happening and where there's still work to do. And the data reflects many of the themes we spoke about earlier: the need for tailored risk assessments, consistent application of customer due diligence, clear governance, and effective systems and controls. Now, we will continue to use the data to inform our regulatory focus and support activities, and we encourage you to reflect on how these insights might apply to your own program and practices. Now, with that being said, that brings us to the end of today's forum. Otherwise, I will pass over to Emma. Thank you.
Thanks, Steph.